Well, let's talk how the global markets have been doing over the last day or so. In fact, US markets saw a large whipsaw. In fact, they'd fallen off and the recovery has been quite dramatic through yesterday, that is on Tuesday. In fact, the Dow, which was down over 700 points, closed down only 130 points at close yesterday, which is down just a little less than 0.5%. In at close yesterday. The S&P 500 actually ended in the green. It was up around 0.1% at close, and the Nasdaq saw a rise of 1.75%. So there's been a good rebound on all three indices, especially in the US, and that's largely driven by how bond yields have gone. Bond yields have come off their highs, and that's what's probably helping tech stocks the most in terms of their recovery. Of course, recession risks not helping as the risk of trade played out with regard to how bonds have been bought on over the last few days. When we're looking at how the European market did, European market largely in the red across the board yesterday. When we're looking at both the DAX and the FTSE, which is the German and the UK or the London index, both were down 2.9%, while the stock 600 was down 2.1%. So strong losses seen there as the rate cycle changes in Europe. Of course, the European rate cycle still to go up in a substantial way. That is set to happen, and as that happens, indices will face a little bit of brunt. When we're looking at the pre-market, or rather as to how US futures are doing currently, US futures are largely lower. We're looking at 1/3% down on both the Dow and the S&P 500 futures. So we're seeing cuts there, but small cuts, minor cuts on the basis of the rebound yesterday, really small. When we're looking at how Asia has opened though today, it's opened largely lower. The Nikkei is down 1.3% as we speak. The Shanghai as well as the Hang Seng also down over 1% each as we speak. The ASX 200 is down around 0.5%, and the Kospi is down 0.9% as we speak in early trade today. So definitely some pressure on Asian indices. The SGX Nifty, however, is up around 1/5% and holding up quite well. Why is this happening? One of the triggers is, of course, oil. Oil has come off 10% versus yesterday, and that's a steep fall, largely on the back of recession fears and demand worries. However, Goldman Sachs has come out with a report saying that there is no real fear, there's no real worry, and that oil will continue upwards. This sell-off has been overdone. Also, what they've noticed is volumes. Trading volumes were lower on the back of the 4th of July weekend, the longer weekend that closed on Monday, and due to which there has been some sell-off in oil as per Goldman Sachs. Have to wait and watch as to how this plays out through the week, and definitely keep your eyes out on oil as well as gold. Gold has come off quite sharply. Of course, the dollar index strength, dollar index has now gone above the 106 mark, in fact almost at 106.5 as we speak, and that has played off on gold. It's played off adversely rather on gold. In fact, gold has come off over 2% versus where we were exactly yesterday, over 2% down. Gold is below that $1,770 an ounce mark as we speak, and of course with the dollar index going up, dollar index now at a 20-year high 106.5, gold is definitely going to be under pressure. So keep your eyes out on that one as well. When we're talking of bond yields came off below that 2.8% mark before staging a recovery by a few bips. It's currently at 2.83% is where the 10-year US bond yield is at. Again, the bond yield curve inverted 100% of the time. When the bond yield inverts, there is an oncoming recession in 24 months. So that continues to be the larger risk, and investors continue to keep their eyes out on how bonds are playing out. Lastly, on the crypto side of things, well, crypto, which fell quite sharply in trade yesterday along with the gold and the oil and other commodities, right? So crypto had fallen quite sharply. Bitcoin was around the $19,000 mark. Rebounded in early trade today. It was above the $20,000 mark, and it's come off that $20,000 mark, just below it as we speak. So that's where we're standing at. Positive for Indian markets at the moment, even though Asia looks tepid, And when we're looking at US futures, they're down too, but despite that, the SGX Nifty continues to hold. So largely it looks like a positive start, especially for India, on the back of those oil prices coming off, as well as US markets going up. So some bit of hope. Also, mind you, FIIs have bought, and they've been net buyers in the cash market yesterday. That kind of may help the Indian markets go up as well.